This video is going to be a quick one, repetition video again about last week, what you could have took, what options that you had of taking trades. So one of the key options to take a trade was, first one was this right here, and this was two ways that you could have took the trade. You could have took it on a fib. So this was the low right here from this was Monday, and this was the top on Tuesday, and this is how you could have took the trade. So this area right here is a 6-1, and at the same time this is an institutional candle right here. This is the 1 hour institutional candle that price got pushed into because of the fact. Why is this an institutional candle? Is once you have a opposite reaction, so this is the bearish reaction, even though we are bullish, we have a strong bearish reaction, not a lot of volume, so this is just institutions dropping price to gain liquidity, so they will more likely try to get back into this zone again right here. So you can see it. We had a push come down into this area. We're going to look on the 5-minute in a little bit. I'm just going to show you on the 1 hour as far as why you could have took this trade. It wasn't the greatest trade as far as risk to reward, but I took the trade. So let's look at it right here. If my computer can load for some reason, I'm getting a little glitched. Okay, there we go. So this was the trade right here. You entered right here on this. So we had a push down into this zone, which is the institutional candle and the 618. So we had a push down. Every single time price dropped, we had a rise in price. That was indication to me. So once we broke levels, we had a rise in price right here. You can see it. When we got higher up in price, volume decreased. Same thing again. We had a push down. Volume increased. And that is indicating to me that basically bears are trying to gain liquidity. So they're letting price drop and pushing price down to gain liquidity. Once price rises, they no longer will purchase. So this is what happened. As soon as we came into the zone, we broke all of this right here to gain the most liquidity. Stop losses all got hit. And then what happened is you see this on the 5-minute. You see this bullish reaction after the bearish. I had high volume. I was talking about it right here. You can see this high amount of volume is higher than the whole entire day. And it is a clear indication once you have a bullish reaction into a 618 area. I won't take the trade until I get confirmation, of course. So our confirmation came into here. You can see this is a no supply right here. Confirmation came right here. Okay, so that's how you would have took the trade. You took a confirmation trade on the close. An aggressive trade would be to take it when it breaks above, but that's not how I trade. Some people do trade no supply, no demand that way. They have very tight stop losses, but this is the way I take the trade. Confirmation right there. Stop loss would be about below here or below the no supply's lowest wick. Okay, and then you ride this, and this is how you ride it. You'll keep going up. As soon as you see price give you another option to buy again, you buy again on a second pullback with a no supply right there. You can see it right here. So people will ask you, for example, why didn't you buy right here on this no supply? Problem is this no supply is there was no quick reaction. I need, for me, after I enter another trade, I need it to be quick reaction. So there is a no supply right here, quick reaction to the upside. It didn't lag. So right away we broke above. So I entered again right here, and we rode this thing above until we reached to this area right here. Exit the trade. I think we exited, I think it was this area right here. So we held this over to the next day, and we took profit though first right here. Stop loss into this area right here, and as soon as I seen something like this happen with this high amount of volume, I re-entered the trade and moved stop loss again, and then we rode this thing all the way up to right this area, which was, yep, 1745. Then after that, there was an option to short. I would not short it, but I'm just going to tell you that there was an option to short. So let's look at the 1 hour. Based on volume, there was an option to short, and based on the zone, you had this institutional candle right here, this final push up, and there was a bearish reaction. So let's look at that. This was on March 17th. You had a bullish reaction up, bearish reaction to the downside. You can see it right there. So now this is indicating to me that this is going to be a strong area, a strong zone, strong institutional candle, whatever it's called. And you can see, look at this right here. We had a bullish push up. We had a strong bullish push up to gain liquidity above all of this, and high volume. Not the greatest reaction, but it consolidated in this near this institutional candle, so there was a option to short when you had this last push up right here on high volume. Very aggressive way to take a short. I would not personally take it, but there is VSA traders that do take it. I'm just showing you how VSA, how volume spread analysis would take this trade. So they seen something like this, for example, a bearish reaction to the downside on high volume, but once we are rising up, we are getting an increase in volume. You can see it. Rise up in price, increase in volume. We come down, decrease, we come back up, and you can see very tight spreads. So the volume spread is basically on the closes. So as price rises and volume increases, you're getting tight spreads. So it's the open and the close, the open, the close, and you get another open, close above here. Once spread gets wider, volume decreases. This is going to be for another video. I'm just giving you a little rundown on it. That means now we are getting into a tight range where there is no longer liquidity and it's time to short. I do not take trades like this, but this is one of the types of ways you can take volume spread analysis. And then you had to short all the way down through until volume really heavily increased over here. That is for gold. And let's look at GBP, JPY. Let's look at it on the 1 hour. So this is another institutional candle. This is, if you go back on JBP, JPY, I'm not going to go back because for some reason trading view has been acting up these past couple weeks on my computer specifically. So I'm just going to show you guys what it is and how you could have took this trade, because this right here, go back on 153.40, go back all the way the last time I touched this zone and this institutional candle, and you'll see why this is a strong area to short with a very tight stop loss, just because you have a strong bullish up move. First things first is we want to look for high volume to the upside. We never got that. So your other option would be to look for volume spread analysis. This is a volume spread right here. Small closes, so pin bars basically. Small closes, small closes, small closes. Small open, close. You can see 3 candles in a row, and you had a strong bearish reaction of volume. This is selling pressure. This is not buying pressure. Even though increase in volume came in, this confirmation right here is confirming to you that it's time to short. Why? The 1 hour, you can see right here, low volume, a no demand candle right there, and also right here, double no demand candles with a confirmation is an indication to you that it's time to short the pair. So I'll repeat that again. You had no demand, no demand, double no demand right next to each other with a confirmation candle after, close below them. It is time to short. Time to look for shorting opportunities. So if you go to the 5 minute, let's go to the 5 minute. and see that short opportunity. And it'll be more clear on the 5 minute when you look at it. So let's get a nice zoom in right here. About this is what you would be looking at right here. First things first is you had this increase in volume around here, this area right here. This is all selling pressure. So how did we look for this? After we continually tried to break above. So we had an increase in volume up, bearish reaction. Increase in volume slightly up because we're coming to test, bearish reaction. Again, increase in volume very slightly. Again, because we're testing this area. See how we tested the high up. We couldn't break above here. We couldn't break above here, and that's it. Bears are kind of in control, and bulls know that. So we look for short opportunities. The first short opportunity came in right here on the 5 minute. You entered right here, or a little bit right here would have been better conservative trade. This is aggressive. Right here, a stop loss above here, and you can see that is about, let's say, that is about roughly stop loss above there. That's about a 10 pip stop loss, 10, 12 pip stop loss, you could say. And your target, I'm not gonna say this is your target or area, of course not. Your target would have been in this area right here. So that's a pretty nice decent trade. That's about a 4-to-1. So again, that's how you could have took the trades last week. This was April 6th. I think it was Tuesday. So that's JPP, JPY. This is how volume spread analysis, how I will look at the charts. Please subscribe and hopefully like these videos. These are more quick videos, more a little bit on the advanced side for people that understand kind of price action and a little bit about volume. I'm going to try to make a video soon. Subscribe so you can see this video come out soon, which would be basically explaining more in details about volume on the charts, and we're going to focus on volumes and not about trade. We're going to focus about why volume helps, what it is you look for, what volume spread analysis is, also no demand, no supply, all those kind of things. And lastly but not least is going to be the most announcement. Subscribe so you can be notified. Is I'll be start going live for about 45 minutes to an hour, early in the morning, which is going to be New York session, around between 7 a.m. to 8 a.m., something about that time, to analyze the charts. Peace out, guys.